Good morning, traders. So, a couple of weeks back, I started a wheel trade back on June 13th for PayPal. Now, the wheel is where you sell a put waiting to get a sign. Now, I may roll this put out in time. I may roll it up if I don't get a sign during this expiration. This expiration is in 2.5 weeks here in July. But I'm going to show you another thing that can sometimes be done with these, which is a pretty interesting addition to the trade. I'm going to do what I call juice this trade a little bit. And how I'm going to do that is I'm going to come in and I'm going to add in a call spread on the upper side. Now, if I take a look at a chart of PayPal, I can see that PayPal has had a lot of what had been resistance and became support and became resistance again in that 75 range. So, how might I bring in some additional income if I think it's unlikely PayPal might get past that 75 mark? Well, a logical way of doing that would be to come in, pick a point. I'm going to go a little above 75, and I'm going to sell a call spread. So I'm going to sell a 77 call and buy a 79 call. So let's include that as well. And then that makes my profile look more like this. So what that did was it boosted the max profit. I think previously it was about 103. That boosts that max profit up to 170. It also still has very little risk on the upside, but it does have a touch of risk. If I wanted to remove that touch of risk, I could tighten up this call spread a little bit. Tightening up that call spread basically makes sure that I have zero upside risk if this explodes to the upside. So that might be a possibility there as well. You notice that it doesn't juice the trade quite as much as if I widen the spread out a little bit, but it does certainly give it some additional premium coming into the trade. Now, I could even, let's just see what happens if I move this down to 76. So I actually like that a little better. Moving that to 76, keeping that a 2-point wide spread gives me very limited risk on the upside, just a couple of bucks. And it makes my maximum profit now 185. Another thing is that it reduces my downside risk just a little bit. Not a big factor here because of the additional premium that I take in on these two. This is a naked put. So if PayPal were to tank to nothing, I will be losing a significant amount. Obviously, that's not what I'm expecting here. I am expecting PayPal to stay above the 67.50. Or if it does go down to 67.50, maybe it goes to 67, maybe it even goes to 65, I am going to get assigned and I'm fine with that. The whole purpose behind doing this is that I do want to own PayPal at some point, and I'm willing to wait and get paid by selling these puts to get into PayPal. In this case, I sold this put for $131. So that means that my cost basis will be reduced by $1.31 per share if I were to get assigned prior to or on July 18th. Now, if I don't get assigned and I go and I roll this out to a future expiration and possibly a different or maybe even a higher strike if PayPal goes higher, then I get to add that, whatever premium I get then, on top of this $1.31. It'll probably be another buck or two. So then I've lowered my cost basis by $2 to $3 a share at whatever point I get signed. So look to follow this along. The wheel, which is essentially what this process is, I'm right now looking at the getting in side of the wheel. Once I get assigned, I will sell calls at points I'd be interested in selling the stock, and I'll keep selling those calls until it finally gets called away from me. So again, this is the first part of the wheel, and give me a thumbs up, a like, and subscribe if you like this sort of content. Thank you so much and take care, everyone.